The kitchen light was on at 5:47 in the morning. That was the first thing the neighbors might have noticed, if any of them had been awake. The pale yellow glow coming from the window of the house on Delwood Avenue, steady and still, the way lights look when nobody inside is moving, when somebody is just sitting there, not sure what to do next. Markus Graves was 51 years old. He had wide hands built for work, a jaw that hadn't softened much since his 40s, and a habit of waking up before sunrise that he'd carried with him since his days on a loading dock in Cincinnati. He had worked hard his whole life. He had never asked for anything he didn't earn. And right now, at 5:47 in the morning, he was sitting at his kitchen table staring at a letter that made him feel, for the first time in a long time, like the ground beneath his feet wasn't entirely solid. The envelope was white. The return address was printed in clean official font. Internal Revenue Service, Department of the Treasury. He had already read it twice. He was about to read it a third time, not because the words were unclear, but because they didn't feel real yet. Dear Mr. Graves, your recent account activity has been identified for review under Federal Financial Monitoring Guidelines. This notice is not a determination of wrongdoing. However, your cumulative cash deposit pattern over the previous 30-day period has triggered an automatic report filed by your financial institution under the Bank Secrecy Act. Markus set the letter down. He picked up his coffee mug. The coffee had gone cold 20 minutes ago. He drank it anyway. Outside, a car passed slowly down the street, headlights sweeping across the wall. Then it was quiet again. He thought about everything he'd deposited over the last month. The $780 from fixing Earl Donahue's roof after the October storm. The $650 from the weekend he spent helping his cousin move and got paid in cash because that's how his cousin did things. The $900 from the auction, Linda's auction, the one where he'd finally sold most of the furniture from the back bedroom, the furniture that had been sitting there for 2 years because he couldn't bring himself to deal with it before now. He hadn't done anything wrong. He was almost sure of that. Almost. There's a number. The voiceover settles in, low and even, like someone speaking carefully in a quiet room. A specific number, and the moment your deposits cross it, not all at once, but slowly, in pieces, the way honest people tend to save money, a flag goes up inside a federal monitoring system that most Americans have never heard of. Markus Graves didn't know the number. He didn't know the rule. He didn't know that in 2026, the IRS wasn't just watching the rich. They were watching the pattern. And his pattern, built from grief and hard work and the kind of careful saving his mother had taught him, looked to a machine like something worth investigating. He read the letter a third time. Then he reached for his phone and called his daughter. To understand why that letter scared Markus Graves the way it did, you have to understand who Markus Graves was before it arrived. He grew up in Dayton, Ohio, third of 4 kids, in a house where money was discussed the way weather was discussed, constantly, practically, and with the understanding that things could change without much warning. His father worked at a plant that made auto parts. His mother cleaned offices downtown 3 nights a week on top of raising children during the day. They were not poor in the way that makes people desperate. They were the other kind of poor, the kind that makes people careful. Markus carried that carefulness into adulthood like a tool he never put down. He spent 18 years as a logistics coordinator for a mid-size freight company in Cincinnati. He was good at his job. He understood systems, understood how things moved from one place to another, understood that the details other people overlooked were usually the details that mattered most. When the company downsized in 2021, he took his severance, moved back to Dayton, and started doing what he'd always done on weekends for extra money: contracting work, roofing, carpentry, small repair jobs for neighbors and church members, and anyone who needed something fixed and couldn't afford to call a company. He was good at that too. His wife, Linda, had passed away 26 months ago. Pancreatic cancer, fast and brutal, the way that particular disease tends to be. They had been married 22 years. She was the kind of woman who remembered every birthday, who made the house feel like a place you wanted to come home to, who kept a handwritten budget in a notebook in the kitchen drawer because she didn't fully trust computer spreadsheets with things that mattered. After she died, Markus kept the notebook. He didn't write in it for almost a year. He just kept it in the drawer where she'd left it, next to the takeout menus and the spare batteries, and sometimes he'd open the drawer for something else and see it there and close the drawer again without touching it, Then slowly, the way grieving people slowly begin doing the things that living requires, he started rebuilding. He sold some of the furniture Linda had picked out for the guest room, a dining table, a dresser, a rocking chair she'd bought at an estate sale, and refinished herself. He deposited the cash from weekend jobs. He was careful, like he'd always been, keeping his deposits small and regular because that was how he'd always done it. Never big amounts all at once, just steady, quiet accumulation, old habits, his mother's habits, Linda's habits. He didn't know those habits had a name in federal law. He didn't know that name was a problem. His daughter, Renee, was 27 and lived 40 minutes away in Columbus, where she worked as a claims analyst for an insurance company. She was sharp and practical, and she worried about her father in the specific way that adult children worry about parents who refuse to admit they need anything. Quietly, constantly, and with the particular frustration of someone who can see a problem clearly but can't make the other person look at it. She had been trying to get Markus to consolidate his bank accounts for months. He had been resisting for months. That Sunday morning, when he called her at 5:51 a.m., she answered on the second ring. "Dad, what's wrong?" "Nothing's wrong. I got a letter." "From who?" Markus looked at the envelope on the table. "The IRS." There was a pause on the other end of the line. Not a long one, but long enough. "Read it to me," Renee said. He read it to her, all of it. She didn't interrupt. When he finished, she was quiet for a moment, and then she said very carefully, in the voice she used when she was trying not to let him hear that she was alarmed, "Dad, don't call them back yet. I wasn't going to call them. I was going to go down to the bank and ask what this means." "Don't do that either. Renee, just listen to me, please. Don't call anyone. Don't go anywhere. Don't respond to that letter until we figure out what we're actually dealing with, okay?" Markus looked out the kitchen window. It was getting lighter outside, just barely. "Okay," he said. What Markus didn't know yet, and what Renee was beginning to suspect, was that what they were dealing with had a very specific name, a very specific legal framework, and a very specific set of consequences that had nothing to do with guilt and everything to do with pattern. In 2026, the IRS wasn't just auditing tax returns. They were running behavioral analysis on millions of accounts simultaneously, looking not for large, suspicious transactions, but for small, repeated ones that fit a profile. And Markus Graves, an honest man depositing honest money, fit the profile almost perfectly. Renee drove to Dayton that same afternoon. She brought her laptop, a legal pad, and the kind of focused, slightly frightened energy that Markus recognized from when she was a teenager, preparing for something she knew was going to be hard. She sat across from him at the kitchen table, the new one, smaller than the one Linda had picked out because Markus had sold that one, and she opened her laptop without saying anything dramatic, which he appreciated. "Talk me through every deposit you made in the last 2 months," she said. Markus told her, all of it, the amounts, the dates, the reasons. Renee typed while he talked, building a spreadsheet with columns for date, amount, source, and bank branch. That last column was the one that made her go still. "Dad," she said, not looking up from the screen, "you deposited at 3 different branches." "Yeah, the one on 5th is closest to Earl Donohue's house. The one on Montgomery is near the church. The one downtown I stop at when I'm in that part of town." "That's not how the system sees it." "What do you mean?" She turned the laptop so he could see the screen. She had pulled up something, a government page, dense with text. "The Bank Secrecy Act," she said, "and the IRS's updated behavioral monitoring guidelines from January 2026. Multiple branches, repeated small deposits, 30-day window. Dad, this isn't just one flag. This is 3. Markus looked at the screen. He couldn't follow all the language, but he could follow her face, and her face told him enough. "I didn't do anything wrong," he said. "I know. I was just depositing money I earned." "I know that too." "Then what's the problem?" Renee closed her laptop halfway, the way people do when they're about to say something they'd rather not say. "The problem," she said, "is that the system doesn't know your story. It just knows your numbers." The Bank Secrecy Act, originally passed in 1970, requires financial institutions to report certain types of cash transactions to the federal government. Most people know about the $10,000 rule. Any single cash deposit above that threshold triggers an automatic currency transaction report filed directly with the IRS. What most people don't know is the second rule, the one that doesn't have a clean round number. the one that was significantly expanded in 2026 with new enforcement technology and new funding, the rule about patterns. The next morning, Markus called his bank. He waited on hold for 11 minutes. When a representative finally answered, he explained the situation as clearly as he could. "I received a letter from the IRS about my account activity," he said. "I just want to understand what happened." The representative, a woman named Patricia, going by the voice somewhere in her 30s, professional and neutral, pulled up his account. "Mr. Graves, I can see that a suspicious activity report was filed on your account on November 19th. By who?" "By the bank, sir. It's automated. When the system identifies a pattern that meets the reporting criteria, it files a SAR without requiring human review." "A machine reported me?" "The monitoring system flagged the activity, yes." "And nobody at the bank looked at it? Nobody said, 'Let's find out who this is before we send his name to the federal government'?" A brief pause. "The automated system is designed to ensure regulatory compliance, sir. The report doesn't constitute an accusation, it's simply a notification." Markus gripped the phone a little tighter. "A notification to the IRS." "Yes, sir." "About me." "About the account activity, sir." "Those aren't different things." Another pause. Patricia's voice stayed carefully even. "Is there anything else I can help you with today, Mr. Graves?" He thought about several things he could say. He said none of them. "No," he said. "Thank you." He hung up and sat with the phone in his hand for a long moment. The bank had not done anything illegal. Patricia had not done anything wrong. The system had functioned exactly as it was designed to function, and that, Markus was beginning to understand, was the most unsettling part of this entire situation. There was no villain here, no conspiracy, just a law and a machine and a pattern and a man who had no idea he was inside any of them. When Renee came back over that evening, she had done several hours of research and she looked like someone who had found things she wished she hadn't found. "Sit down," she said. "I am sitting down." "I know. I'm saying it because I need to say something first." Markus put his hands flat on the table. "Just tell me." "Civil asset forfeiture," Renee said. "What's that?" "It's a legal mechanism that allows the federal government to seize assets, including savings accounts, if those assets are suspected of being connected to illegal activity. And the standard of proof is not the same as a criminal case. In a criminal case, they have to prove you did something wrong beyond a reasonable doubt. In a civil asset forfeiture case, they don't." Renee looked at him. He had understood faster than she expected. "They have to show the money is connected to illegal activity," she said. "The burden of proof shifts. You, or your lawyer, have to show that it isn't. So I'd have to prove I'm innocent." "In this specific context?" "Yes." Markus was quiet. Outside, his neighbor was pulling into his driveway, headlights sweeping across the kitchen curtains. Normal evening, normal neighborhood. Nothing to suggest that inside this particular house, a man was sitting across from his daughter, discovering that the money he'd saved since his wife died could, in certain circumstances, be taken from him without anyone ever charging him with a crime. "Have they done that?" he asked. "Taken people's money, people who didn't do anything?" Renee pulled a folder from her bag. Inside were printed articles. She slid them across the table one by one. A dairy farmer in Iowa, a restaurant owner in Mississippi, a retired school teacher from Georgia. All had money seized, all were eventually cleared, none of them got everything back. The legal fees alone consumed a significant portion of whatever was returned. Markus read each article carefully. When he finished, he stacked them neatly, the way he stacked everything, and set them at the corner of the table. "How much is in my account right now?" he asked. $9,847, Renee said quietly. He nodded slowly. "Okay," he said, "so what do we do?" That question, so simple, so reasonable, so human, was one that the IRS monitoring system was not designed to answer. The system processed transactions. It identified patterns. It filed reports. It did not account for grief or practicality or the particular way that people who grew up careful about money tend to save it. What Markus needed now was someone who worked with the system well enough to translate his story into a language it could understand. What Markus needed was a lawyer. His name was Dennis Achebe. Renee found him through a colleague at the insurance company whose brother had used him 2 years earlier for an IRS dispute that had quietly, efficiently resolved itself. Dennis was 44, wore glasses with thin metal frames, and had the specific kind of stillness that comes from spending 20 years in rooms where people were either very frightened or very angry, and learning how to be neither. He had his own office now, a small practice in downtown Columbus, 2 associates, and a reception area with good lighting. He charged more than Markus wanted to spend. Renee said it didn't matter what it cost if it kept the $9,847 in her father's account. Markus drove up on a Wednesday morning. Dennis's office smelled like coffee and paper. There were framed diplomas on the wall, a window overlooking a parking structure, a potted plant in the corner that had clearly been there long enough to have opinions about the room. Dennis shook Markus's hand with a firm, brief grip, gestured at the chair across from his desk, and sat down. "Tell me what happened," he said. "In your own words. Start from the beginning." Markus told him. Everything. The weekend jobs, the sales, the deposits, the 3 branches, the letter, the phone call with the bank. When he finished, Dennis had written half a page of notes and asked 3 specific questions about dates. Then he set down his pen. "Mr. Graves, I want to explain something to you that most people, including most people who receive letters like the one you received, don't fully understand, because I think it will help you stop being frightened and start being focused, and focused is what we need you to be right now." Markus straightened slightly in the chair. The threshold most Americans know about is $10,000. A single cash deposit above $10,000 triggers a currency transaction report filed automatically with FinCEN, the Financial Crimes Enforcement Network. That rule has existed since 1970, and it's fairly well understood. "I never deposited more than $900 at a time," Markus said. "I know, and that's the irony." Dennis picked up his pen and turned it over in his fingers. What triggered your SAR was not the amount of any individual deposit. It was the cumulative pattern. In January 2026, the IRS implemented expanded behavioral monitoring guidelines funded in part by the Inflation Reduction Act enforcement budget. These guidelines lowered the effective pattern threshold to $5,000 in cumulative cash activity within a rolling 30-day window, provided that activity exhibits certain behavioral characteristics. Markus frowned. What characteristics? Regularity, repetition, multi-location activity, consistent amounts within a narrow range. Dennis looked at his notes. Your deposits ranged from $650 to $900. They occurred at intervals of approximately 7 to 10 days. They were made at 3 separate branches of the same institution. To the monitoring algorithm, that pattern is statistically consistent with what the law calls structuring. Structuring, Markus repeated. The practice of deliberately breaking up large cash transactions into smaller ones to avoid triggering the $10,000 CTR threshold. Markus stared at him. I wasn't doing that. I know you weren't. I didn't even know that was a thing. Most people don't. And that's exactly the problem with the way this law is enforced. Dennis set his pen down. The statute does not require intent for a civil action. For a criminal prosecution, yes. They'd need to prove you deliberately structured to avoid reporting. But for a suspicious activity report and the subsequent inquiry, intent is not required. The pattern is sufficient. Renee, sitting beside her father, spoke for the first time in 10 minutes. So, he's being treated like he's guilty of something he didn't know existed. He's being reviewed, Dennis said carefully, for activity that resembles something illegal. There's a legal distinction there. It's a narrow distinction, but it matters. Does it feel narrow? Renee asked. Dennis looked at her with what might have been the beginning of a sympathetic expression. No, he said, it doesn't. The number then was never $10,000, not in 2026. The number that triggered federal attention was $5,000 spread across 30 days, deposited in a pattern, made at multiple locations. It was a number that a man doing weekend contracting work and slowly selling off the furniture that reminded him of his dead wife would hit almost automatically, without ever knowing the rule existed. The law had always permitted this kind of monitoring. What changed in 2026 was the technology, the scale, The speed, suddenly behavioral pattern analysis that might once have required a human investigator to spend days reviewing account records was being done in milliseconds across millions of accounts simultaneously. The system was not looking for criminals, it was looking for patterns, and patterns, unlike criminals, don't have reasons. Dennis leaned forward slightly. Mr. Graves, I want to ask you something, and I need you to answer it as completely as you can. Go ahead. Every deposit you made, every dollar, can you account for it? Source, approximate date you received it, any documentation that might still exist? Markus thought about it. Some of it. Earl Donahue wrote me a check for the first job, then gave me cash for the second one. I've got the check stub. The auction. Linda's furniture. I think the auction house sent me an email receipt. The cousin, that was cash. Nothing written. Text messages? He might have texted me about it, asking me to help. Neighbor testimony? Dale Hutchins, next street over, he'll remember. He paid me in cash too, but his wife was there. Dennis nodded, writing. The IRS does not expect people to maintain formal business records for informal cash income, he said, but evidence of source, any evidence, is what transforms your account activity from an unexplained pattern into a documented history. That's our foundation. He looked up. This is winnable, Mr. Graves. I want you to know that, but I also want you to understand something more important, and I want you to really hear this, not just nod at it. Markus met his eyes. You didn't do anything that felt wrong to you. You saved money the way you were taught to save money. You made deposits the way practical people make deposits at whatever branch is nearby. You didn't know the rule. Most people don't. But the system doesn't know that you didn't know, and it doesn't care. What matters now is documentation, response time, and the right framing in our reply. He paused. That's what I'm here for. Renee exhaled slowly. How long does this take? She asked. If we file a comprehensive response within the next 10 business days, and the documentation supports the narrative, which I believe it will, we're looking at 4 to 6 weeks for a resolution. 4 to 6 weeks, Markus said. Possibly less. Markus looked at the plant in the corner for a moment. Then he looked back at Dennis. My wife's name was Linda, he said. She died 2 years ago. Most of that money, the deposits, they came from selling her things. Things she picked out, things she made. I sold them because I needed to move forward, and I didn't know how else to do it. He stopped, straightened. I just want you to know what that money is, what it came from. Dennis didn't say anything for a moment. Then he picked up his pen. Tell me about everything you sold, he said. I want all of it in the response. What Dennis Achebe understood showed what 20 years in tax law had taught him, working cases involving immigrant families and small business owners and retirees who kept cash in shoeboxes because they'd grown up in places where banks weren't always trustworthy, was that the IRS monitoring system was not a moral instrument. It was a pattern recognition instrument. And to defeat a pattern recognition system, you didn't argue about morality, you broke the pattern, you replaced it with a story, a documented, specific human story that the algorithm could not generate on its own. That was what he was going to build for Markus Graves, a story the IRS couldn't argue with. It took 8 days. 8 days of Markus going through every drawer, every email folder, every text message thread on his phone. 8 days of Renee taking time off work to help him scan documents and photograph receipts and call the auction house to request a duplicate record of the estate sale. 8 days of Dennis's office sending questions and Markus answering them, the kind of methodical back and forth that felt, at times, exhausting, and at other times strangely clarifying, as if the process of documenting his own life was forcing him to see it more clearly than he had in a long time. Earl Donahue wrote a signed letter explaining the 2 roofing jobs, the check and the cash both, with dates. Dale Hutchins drove over in person to sign a statement. His wife, Bev, added a note at the bottom in her own handwriting confirming she had been present when Dale paid. Marcus's cousin Gerald called and apologized 3 separate times for not having given him something in writing, and then sent a text message chain that Dennis said would more than suffice. The auction house, a small family operation that had been handling estate sales in the Dayton area for 30 years, sent a complete itemized receipt for everything sold at Linda's auction in October, with Marcus's name on it, the items listed one by one. A dining table, cherry wood, refinished. A rocking chair, oak, a dresser with brass pulls, a box of kitchen items, a sewing machine, vintage, with attachments. Markus sat at his kitchen table reading the receipt the night before Dennis was going to file the response. He read each item. He had sold them because he needed to, because Linda would have told him to stop holding on so hard, because the back bedroom had started to feel less like a memory and more like a weight. He had made the right decision. He still missed every single thing on that list. He folded the receipt carefully and put it in the folder Dennis had given him. Then he opened Linda's notebook, still in the kitchen drawer, and for the first time in over a year, he picked up a pen and wrote something in it. He didn't write a budget. He wrote her name, just that, Linda, and the date, and then he closed it and put it back. Dennis Achebe filed the response on a Thursday morning. It was 41 pages. It included signed letters, receipt scans, text message records, the complete deposit history with annotated source documentation for every dollar, a legal brief addressing the structuring question under current IRS guidelines, and a formal request under the Taxpayer First Act for review of the SAR designation. It was, Dennis told Renee when he called to let her know it had been submitted, one of the cleaner cases he had put together, not because the law was simple, because the story was true. The IRS responded in 19 days. The letter was short, a single page. The language was formal and gave nothing away emotionally, the way government letters never do, but the content was unambiguous. The review of Markus Graves' account activity had been completed. No evidence of intentional structuring had been found. The matter was closed. No penalties. No further action required. Markus read it standing at the mailbox, still in his work jacket, sawdust on his sleeves from a job he'd done that morning. He read it twice. Then he walked back inside, set it on the kitchen table, and called Renee. She picked up before the first ring finished. "Well," she said. "It's over," he said. She made a sound he hadn't heard from her in a long time, a sound like relief leaving a body that had been holding it for weeks. "Dad," she said, "I know. You should have called me the day the first letter came. I know that too. Next time." "There won't be a next time. I'm making some changes." She was quiet for a moment. "What kind of changes?" "Dennis said I should consolidate my accounts. One branch. Keep better records of where the money comes from, even for cash jobs." "That's..." She sounded surprised. "That's actually exactly what I've been trying to tell you for 2 years." "I know. I mean, I'm not saying I told you so. You're a little bit saying it. Maybe a small amount." He sat down at the kitchen table. The afternoon light was coming through the kitchen window the way it used to come through when Linda was alive and would stand at the counter making coffee, and the light would hit the side of her face, and he'd come in from work and she'd hear him and turn around without saying anything, just turn and look at him, and that was enough. "Renee," he said. "Yeah. You know that sewing machine, the one we sold at the auction?" "Mom's." "Yeah." He stopped, cleared his throat. "I should have kept it." "Maybe," Renee said softly. "She used to make things on that machine, for the house, curtains, those covers for the chair arms that I always thought looked old-fashioned, but she liked." "I remember." "I don't know what I was thinking, selling it." "You were thinking you needed to move forward." "Yeah." He looked around the kitchen, at the drawer where the notebook was, at the smaller table, at the window with the afternoon light. "I've been moving forward so hard I think I forgot to, I don't know, bring some things with me." "You brought the notebook," Renee said quietly. He looked at the drawer. "How'd you know about that?" "Because I know you." He didn't say anything for a moment. "Come visit sometime," he said finally. "Not because something's wrong, just come visit." "I'll come next weekend," she said, "and you're making dinner." "I make terrible dinner." "I know, come get it anyway." He almost smiled. The $9,847 stayed in Markus Graves' account. He consolidated to a single branch, as Dennis recommended. He started keeping a simple log of cash, income, job, date, amount, client name, in a small notebook he bought at the drugstore, not because he'd done anything wrong, because the rules existed whether he knew them or not, and knowing them was now his responsibility. That's what 2026 had taught him, not that the government was watching, though it was. Not that the system was unfair, though sometimes it was, but that the space between living honestly and being able to prove you'd lived honestly, that space could cost you everything. And the way to close that space was not complicated. It just required paying attention to things that used to feel too small to matter. Dennis sent a final invoice and a short note. Good outcome. Well-documented case. If you know anyone else who receives a letter like yours, tell them not to wait. The response window matters. Markus paid the invoice, wrote the check by hand, the way Linda had always preferred to pay bills, walked it to the mailbox himself. Markus Graves was not a criminal. He was a careful man, a hard-working man, a grieving man who saved money the way he'd been taught and deposited it the way was practical, and had no idea that the rules around those deposits had changed in ways that could cost him everything. In 2026, the IRS's behavioral monitoring systems processed over 1 million account flags in the first 3 quarters of the year alone. The majority of those flags involved individuals with no history of financial crimes, no intent to deceive, and no knowledge that their ordinary financial habits were being read as something else entirely by a system that doesn't ask for explanations. The number is $5,000. The window is 30 days. The behavior that triggers it is pattern, not amount. Repetition, regularity, consistency across locations. Things that look to a careful and private person, like simply managing their money. If you have ever deposited cash without thinking twice about the pattern, this story was your letter. Not from the IRS, from someone who wants you to walk away from this video knowing the rule before the rule knows you. What you can do right now is simple. Keep a basic log of your cash income. Nothing formal. A notebook, a note on your phone, job, date, amount. That's enough to build a story if you ever need one. Consolidate your deposits when possible. One account, one branch, consistent behavior. Consistency works in your favor when it's documented and works against you when it isn't. If you receive a letter like Markus's, do not call the IRS before you understand what you're dealing with. Do not go to the bank and try to explain yourself to a representative whose system has already filed the report. Call a tax attorney first. Response time matters. Documentation matters. The story matters. And subscribe, because the rules they don't teach you in school are exactly the ones that show up in your mailbox without warning. And this channel exists so that next time you already know. Drop a comment below. Before today, did you know about the $5,000 pattern threshold? Did you know your bank could file a federal report on your account without ever calling you first? And if someone in your life still keeps cash in an envelope in the kitchen drawer because that's how their parents did it and they've never thought twice about it, share this video with them, because Markus Graves got through this. Not everyone does. Know the number, know the rule, know the difference between living honestly and being able to prove it.